Let's go on to look deeper into these pending home sales and this question of suggesting the housing recovery or not. Our next guest says prices will continue to fall as government efforts to stem foreclosures have limited success and jumbo mortgages remain out of reach for many home buyers. Joining us now is PIMCO's mortgage bond chief, Scott Simon. Scott, welcome.
I see, Kathleen.
You know, you and I were talking before the show. You reminded me that you told me that you thought the housing market was going to bottom in the winter. This is just more confirmation that it has?
Yes, indeed. Numbers had gotten really low, and the government came to the rescue. The Fed, the Treasury, the tax credits have all been incredibly successful in terms of turning around home sales. You've seen a bottom in permits. Though we do think the number today was higher than we expected, and you may get a revision downward in the future.
Mark Crumpton has some breaking news for us. Mark.
Yes, and Kathleen and Mr. Simon, we wanted to tell you that Bloomberg News has learned that Senate Majority Leader Harry Reid telling reporters this afternoon that the Cash for Clunkers program will pass. Senator Reid speaking to reporters at the White House. He also says that the Senate will vote on that Cash for Clunkers program money this week. That news just into Bloomberg. Kathleen, back over to you.
Mark, and of course, the whole Cash for Clunkers, another very important aspect of the consumer. But to get back to the home sales, Scott, why do you think we should take this number with just a little bit of a grain of salt?
Well, there's an index that comes out of the Mortgage Bankers Association that shows the number of applications for loans. And unless a tremendous number of people are suddenly buying houses for cash and not taking out loans, the two series have kind of diverged. Now, you are up quite a bit from the lows that you saw in the wintertime. You're obviously way below where we were back a couple years ago. But as a percentage of households, you're actually looking at numbers that pending sales predict would be above the historical averages, above 35-year averages, which I kind of find hard to believe.
Scott, any sense that there are more investors? I mean, it's hard to believe that many people will be buying homes for cash, but any sense that the investors have come back? They're going to buy these foreclosures and just flip them?
I think there are absolutely more investors, but I think most of the investors tend to buy with loans. Even Fannie Mae and Freddie Mac have made it much easier. I think you can now buy either 9 or 10 properties with Fannie Mae or Freddie Mac loans, which was up from, I think, 4. So, yeah, I think you're definitely seeing some speculation in foreclosures.
Loan modifications. You know, the government put out its information today on how banks are doing, many of the servicers, and Bank of America and Wells Fargo are among the worst performers when it came to issuing modified loans. We've heard so much promise and so little delivery.
Well, I mean, the modifications are pretty complicated. Just to use this program that the Treasury was talking about today, various servicers sent out about 1.4 million essentially applications to people to fill in to apply for modifications. Only about 400,000 actually replied at all, and only about 225,000 qualified. So, you know, most people get these letters from their servicer and they go, oh, no, they found me, and they just tear it up and throw it in the trash, or they go, well, I'm just not going to qualify anyway.
Scott, it's Mark Crumpton. I'm here with Kathleen. Even given the numbers that we're hearing today and the comments that you've made, that weak labor market still has got to give you cause for concern.
Oh, absolutely. We continue to think prices will go down through sort of the middle of next year. But unlike, 9 months ago when it just looked like an unabated fall into an abyss, the light at the end of the tunnel now is actually the other side of the tunnel as opposed to the train coming the other way.
But speaking of the train, there's also a train in commercial real estate as well, is there not?
We've been really bearish on commercial for a long time. And commercial is a market that is completely based on borrowing money to buy office buildings, and the rates have gone up so dramatically that people just can't afford it. Continue to see, tremendous number of delinquencies and defaults. Continue to see dropping prices, and I think it's going to look a lot like in terms of a sell-off, about 50%. It's going to look a lot like residential when it's over.
Okay, put it all together.
By the way, it's down pretty far now.
Scott, put it all together for us. You look at a lot of different kind of mortgage bonds. What's the investment conclusion to come out of all this?
Well, I mean, the Fannie Freddie Ginnie paper looks remarkably fair on a historical basis. The non-agency stuff that people talk about, the toxic assets and whatnot, if you didn't know about the last 9 months, you'd probably think they were very cheap. However, they've rallied a lot. So there's lots of people who can take profits. You've got the PPIP investors need to put money to work. It's become very technical, but from a long-term point of view, a lot of this paper still will yield a lot after losses.
Okay, Scott Simon, PIMCO, thanks for joining us.
Thanks, guys.